Hi, Bill Bodnar here, Mortgage Market Guide. Thanks for tuning in to our MMG Weekly Recap. So up on the screen, we have Freddie Mac come out on Thursday and show that mortgage rates continue to rise. And why? Well, we are seeing some incredible resurgence in the U.S. economy, as well as China produced some good numbers this week. So that fear of a recession is gone. In fact, we're seeing the economy actually reaccelerate heading into the spring buying season, which is incredible. And even within this text here that Freddie Mac put out, they're talking about how purchase activity reached a 9-year high, indicative of a strong spring home buying season. Well, again, that goes to that Goldilocks scenario that we've been talking about over and over, with low inflation, low rates, strong economy, tight labor market, all good stuff, high consumer confidence. And so speaking of jobs and claims, this past week, we hit another low in initial jobless claims. So people are not getting fired, right? They are just not, because you can't keep somebody. I mean, there's a gap of 1 million people between people looking for a job and jobs available. I mean, it's really remarkable. So it's a very, very tight labor market. And another thing, remember, that we talked about last time we were together, the average, on average, a recession hits 13 months after the trough in claims. Well, we keep making new lows, and so we haven't hit the bottom yet. Will there be a recession? Of course, at some point. Expansion can't go on forever, but a recession in 2019 is off the table. And so, right now it's just a great time in this home buying season. Next week, we got to look at some things, and we have gross domestic product. This is another report that will carry a lot of weight, because 2 weeks out, the Fed is coming. They're looking at all this data, and the data has really started to get strong. Wouldn't be surprised if they start talking about a rate hike at some point, if it continues to get much stronger. But right now, Fed is sitting on their hands, but they're going to look at these numbers. And if a recession's coming, GDP will be one of those reports we're going to want to watch next week. So we want to stay tuned to that. From a technical basis, there's also a lot to consider here as well. You can see mortgage-backed securities ending the week right above the 50-day moving average. This is important because at the same time, we're watching the 10-year note tickle around that 260 level on that yield. Now, it pulled back a little bit today. It's at 256, or a little bit beneath that 260 mark. It was a great sign to see the yield actually hit 260 and move back off that resistance. That was a really good technical signal. And that also coincided with bonds bouncing off the 50. The reason why this is important is because back here where we had this golden cross, where the 50-day crossed above the 200, this was a really good sign that things were going to get better, and they in fact did. And we've been, really riding along the 50 ever since. It would be kind of negative if we fall beneath it. And if we do, price is probably going to drift down to that 200-day moving average. So there's a lot to watch from both a fundamental basis as well as obviously a chart and a technical basis. So be sure to have your finger on the pulse next week. Anyway, I hope this finds you well. Thanks for tuning in. We'll be back at it next week. Have a great holiday weekend. Bye for now.